Fed's going to kick off its two-day policy meeting tomorrow. Joining us now, former Federal Reserve Board nominee Judy Shelton. She's a senior fellow at the Independent Institute and a former economic advisor to President Trump in his first term. It's good to see you, Judy. It's been a while. I'm reading one of your op-eds from right when the election happened, and you said, now that Donald Trump is the president-elect, expect warnings about the dangers of compromising the independence of the Federal Reserve. That was prescient. I'm trying to determine whether you knew that there would be finger-pointing immediately from people that are on the other side of the president on a lot of issues, or whether you knew that the president would try to change the Fed, which I think you probably think there are fundamental changes that are in order.
I knew the finger-pointing would result, but I think it's very gratifying that President Trump is challenging the Fed. I think it's a healthy move and long overdue. I've been saying on your program for quite a while that the Fed has gotten too powerful, it's too prominent in financial markets, and it's way too political.
But the president, I guess people that would take the other side would say he's just interested as a real estate guy and as president, and we know that all presidents like lower interest rates. They think it's going to help their economic record and the stock market and everything else. The president hasn't voiced the same concerns that you voice about problems with the Fed. He just wants lower interest rates.
Well, I don't think that's necessarily true. I think that he, like myself, probably thinks that it's ludicrous for the Federal Reserve to be deliberately imposing restrictive interest rates, which just prevents access to capital for the private sector at a moment of great transformation of our economy. But that transformation is in favor of Main Street and small and medium-sized business. And when you have a fiscal stimulus program caused by deficit spending, and then the Fed tries to counter that by imposing restrictive interest rates, all you're doing is empowering government, because government will always pay whatever rate they have to at a Treasury auction. But at the same time, you are putting up a real obstacle to access to capital for the private sector borrowers. And so you're inhibiting the entrepreneurial energy that is needed for this transformation to go from the increasing financialization of America's economy to something more solid, based on real economic growth, the kind that actually raises living standards, that offers more opportunity to be a successful entrepreneur, and results in greater shared prosperity. And that's what you would want in terms of monetary policy that's more oriented to the overall economic agenda, which is in favor of harnessing that energy toward a more productive economy.
We had a bank CEO of one of the big banks on last week, and I asked about that question. He said, well, we're being expected to hold a lot of capital and not lend it out, and it's not really a major part of the balance sheet that they get paid on funds that they have to hold.
Charlie Sharp said they'd rather loan the money out because then they can build more relationships with the clients, and that it's a much more profitable relationship.
But they can't,
doing it that way.
I watched that interview. Very interesting, because you notice what he said is, of course, we want to maximize our lending. But then he said, for various reasons, we have to keep not just what we call ample reserves, but abundant reserves, which means too high, these cash balances. And it is a considerable part of the net interest income of banks, which goes to their bottom line. It is a major part of their profitability, which is why I think you would see banks resist if the Fed were to end this mechanism of paying banks on their cash sitting at the Fed doing nothing.
Hey, Judy, can I ask us one question about what might be described as the politicization or the political pressure on the Fed? One of the reasons that I think about the independence of the Fed is because I think about what happens in a financial crisis. Think about 2008. You can go back to 1929. You can look every time in between. And typically, when the Fed has helped save the day, they've had to do things that are remarkably politically unpopular. You actually have to do almost what's at odds with what would be in the political interest at the time. And so the more pressure you have brought to bear, and even the kinds of people on that committee, if they don't appear independent from those in the political class, the more complicated it gets when you actually do have a mess on your hands. How do you think about that?
Well, Andrew, first, I look forward to your book on 1929. And because you brought up 2008, one of the justifications for a central bank with so much power is to avoid the financial collapse, that very kind of debacle. So where was the Fed in 2008? How come no one there saw it coming?
But then, Judy, a better example is Volcker. Volcker would have never been allowed to do what he had to do if you had where did he take rates? Look at where he took rates. It was almost unheard of. Any president in their right mind would, if they had control over the Fed, would have told Volcker, "What are you doing? You're trying," and he did. You're going to break the back of inflation through a recession, and that no president wants that. That's the example that I think it would be impossible for someone to act independently, which Paul Volcker had to do.
But Paul Volcker was very supportive of the Reagan supply side agenda. He said you have to give people incentives to save, work, and invest. What Paul Volcker said to Congress was, you need to balance the budget. And look at the Nixon years prior to that. You had guns and butter deficit spending. You had the end of Bretton Woods in '71. And so the inflation that we started to incur by the end of the 70s is what Volcker then had to wrestle with. But he really pointed a finger at the fiscal deficit spending. And I think when a central bank does have to impose these restrictive rates to fight runaway inflation, I mean, look what happened in 2008. You had the Occupy Wall Street movement really merge with the Tea Party and saying all we know is this financial system is rigged against us. We're all losing because the Fed is going to do everything it can. It's going to throw the kitchen sink at a debacle, often of its own making. And the people who suffer are the ones who then incur whatever inflation, whatever disruptions.
Sure, but I think we can agree that the Fed didn't, missed the crisis on the front end, no question. I think empirically, there's nothing else to say about that. The question is, then when these situations happen, what you do about them. And I think I would like to think that we agree, but maybe we don't, that actually flooding the system is the right answer, as politically unpopular as that may be.
But you end up rewarding the Fed.
I agree you do, but the flip side is then you get into 1929 situation, frankly, where everyone just sits on their hands because they think it's politically unpopular to do anything else, and then you get yourself into a real depression.
But do you think having zero interest rates for 8 years after 2008 made sense? And remember that paying interest on reserves was meant to be emergency authority.
I think we can agree that perhaps it went on for too long. I'm not suggesting it didn't go on for too long at those lower rates. I'm saying, but in the moment, people have to do things that, as I was describing, are sort of politically unpopular. And if the entire Fed becomes a political animal, it becomes a lot more complicated.
But I think you're conjoining the Fed's role as lender of last resort with its newly acclaimed role as manager of the economy. And it's really an anomaly for a free market economy. I don't think that's the appropriate role of the central bank, to see itself as managing by manipulating the interest rate. Right. The most important price in capitalism is the price of loanable capital. I would much rather have the Fed right now fighting inflation the way Volcker did, by actually engaging with markets, responding to price signals, and allowing free market forces of demand and supply for loanable capital to establish the appropriate interest rate. I trust the innate instincts of the private sector more than 12 people voting on it 8 times a year.
It's 17 years later, and would you say that something came home to roost from what happened there? Because we're doing pretty well. And the worst case scenario is that the whole recovery was built on an unstable foundation, and there was no price discovery, and we didn't know really where interest rates should have been. All those things never really resulted in the worst case scenario that a lot of people thought, or did they? We got $38 trillion in debt, obviously, and that could. Is it still? Will things still come home to roost in your view from those mistakes?
Yes, I think that you need a sound monetary foundation, stable money to provide opportunity for people who don't already have financial assets. I think that the Fed's using the value of the dollar more or less as just one more economic variable that they can try to manage to pursue government objectives. But I really think people should be able to count on sound money. So I would say that the Fed's role has been to really exacerbate wealth inequality, income inequality. And I think that really unleashes resentment in a democratic society and feeds the sense of the system's rigged against the guy who just wants to have a connection between effort and reward.
Guess we got to go. Do you think it's okay for Stephen Myron to keep his job with the administration and be on the Fed, even if it's for just 4 months? Or that does seem. Go ahead.
You know, I say just go for it. I think the Democrats have been obstructionists on nominations to serve in the Trump administration across the spectrum. And I heard your interview with Peter Navarro. It's not about retribution, but there's a certain amount of justice. And I do think that you have to be even-handed about this. So I hope he gets put on the board right away.